What's up, everybody? Welcome to the Stocks channel. My name is Corey, and today in the stock market we saw another very volatile day, and we did see selling across the board yet again. When is this tech correction and sector rotation going to finally be over so that we can see if the market is ready to start heading higher? This is going to be another very detailed and educational episode, so if you're interested in learning more about where this tech correction could bottom, you're gonna wanna stay tuned. So first up, let's take a look at the Nasdaq 100 Triple Qs ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so we are looking at the Nasdaq 100 Triple Qs ETF, and remember that we're expecting this ABC correction to play out to let us know when this tech correction is finally over. So remember, with the C wave, we were going to continue to watch to see where the C wave was going to bottom, and we're strictly letting the price action tell us when this correction is over. You cannot just assume anything in this market or take anything for granted. You have to watch the price action because price action is king. So right now, this is what's called a falling knife scenario, and we have to let the price action tell us when we're going to bottom and find support. The good news is I have a lot more price action to show you tonight, and I can tell you that I do think we're near the bottom in the very near future, and I'm going to show you exactly why I believe that in tonight's episode. So originally we said the C wave could end somewhere around 308, or it could come all the way down to about 297, and there's even a scenario, and I don't want to scare you, where we could come all the way down to 280. Now if we did go down to 280, it would take a lot more momentum and a lot more selling pressure to pick up. So I don't want you to get too nervous about the fact that it can go down there. I just want you to be aware that this correction can go much lower because I want you to be defensive and I want you to prepare for the worst case scenario. So right now, let's put our focus more on a scenario that looks more like a 297, and I'm going to switch back over to a 30-minute chart so that I can show you the wave structures. Now remember, for this ABC correction that we're watching in the tech sector, we expect to see 5 waves down to finish wave A, which we did count and we did complete. Then we expected to see 3 waves up to finish wave B, which again we counted and completed. And now we're looking for 5 waves down to complete wave C. So we go down in 5 waves, we bounce in 3 waves, and then we continue to go down in 5 waves. So the next thing I want to show you is why wave C is extending and why it's going lower, which is likely looking like the wave C is going to bottom out in 297. So I want to go ahead and just map this out for informational purposes, and we're going down in wave C in 5 wave structure. So we expect to see 5 waves down, but what we did see confirmed with today's price action is we did get an extended wave 3. What an extended wave 3 means is that wave 3 is the longest of these waves because we do have impulsive wave 1, 3, and 5, but wave 3 is the extended wave. So in this scenario, we do have wave 3 subdivided in 5 smaller waves, which completes the extended wave 3. So we go down in wave 1, we bounce in wave 2, we go down in wave 3, which subdivides in 5 waves in itself, which makes it an extended wave 3. We bounce in a wave 4, and then we complete out a wave 5. So that's the information that I want you to pay attention to, because when I go to the 30-minute chart, we're going to break down exactly how that played out with today's price action. So now we're on a 30-minute chart of the triple Qs, and I want to quickly map out the waves for you. So in wave A, we did go down in a 5-wave structure, and this is the wave structure that we were counting. And then when we saw the price action confirm that wave 5 is bottomed, we did bounce up in a B wave, which went up in 3 waves. So we completed wave A in 5 waves, we bounced in wave B in 3 waves, and now we're going down in wave C in 5 waves. So the first thing I want you to note is that we did extend that wave 3 as I talked about, and we did see wave 3 go all the way down to about $300 today before it bottomed. It does look like we're completing wave 4 and we're getting ready to head down for wave 5. So the question is wave 5 going to truncate and we could find support at 302 or 300, or are we going to go ahead and just come all the way down to 297 or possibly even lower? That's where the price action is king, because we don't know where wave 5 is going to bottom, so we need to watch the price action. If you're on the Stocks channel Discord, I'm going to be watching this very closely tomorrow, and I will let you know when I do think that wave 5 bottomed, which means we're ready to start bouncing and retesting that resistance trend line. So as you can see, wave 3 was very long, and it was actually longer than I expected because I did expect to see wave C truncate and not actually go this low, because I did expect to see buyers stepping in earlier. However, the market doesn't care what I think, and it extended lower anyway, and we saw additional selling picking up. So within this wave 3, we did extend, and we can actually count 5 smaller waves. So we went down here in wave 1, bounced for wave 2, went down for wave 3, bounced in a wave 4, and then completed out a wave 5. So those 5 waves are the extended wave 3, and that is letting us know that selling pressure picked up momentum and we did see that extended wave pick up, and that is why we went to those lower prices. The good news is, however, that we are ending the last and most painful wave of all, which is where everybody is going to capitulate and everybody is finally going to sell out of this market. That is the last thing that I suggest you do, because after these 5 waves complete, we are due for a relief rally, and I am expecting to see that relief rally test our resistance trend line. So I'm going to clean up this chart and I'm going to show you exactly what I'm expecting to come in the very near future to finish out this structure. So for clarity purposes, we're still on the 30-minute chart, and I am expecting to see the 5th wave end somewhere around 297. Whether or not it goes lower is going to be up to the price action, and we'll just have to continue to watch that very closely tomorrow. So after we bottom out in wave 5, that will complete wave C of the correction, and we are due for another 3 waves to the upside, and I am expecting to see those 3 waves test our resistance trend line. Now the resistance trend line is a downward sloping line, so the day we test that trend line will depend on what the price is going to be. In this example, I just drew these lines for reference, and it just so happens to be that the 3-wave bounce is going to retest QQQ levels of about 315. Does that mean that's exactly where we're going to go? Absolutely not, because we don't see the price action yet. But we know the wave structure is going to look something just like this. After that 5th wave completes, we are expecting 3 waves to the upside, and that should test resistance. Now, whether or not the market goes back to a bull market or returns to the bear market will depend on the price action. So what you want to watch for when we get to this test is whether or not we get a breakout of this resistance, a retest of the resistance breakout as support, and then a bounce for a confirmation higher high. If we take out the high from that bounce, that is a bullish breakout, and it means the downtrend is ending and we're actually going into a brand new bullish trend. That is the bull scenario, and the price action will tell us if that scenario plays out. The bear scenario that you want to watch for is we will test this resistance trend line, we will fail to break out, we may even come back up and retest that resistance for one more test and fail yet again, and then we will actually head lower and form a lower low. That would take out this low here, and we would get confirmation that the bear market is resuming. So there's 2 scenarios that play out. Either we go back into a bull market, or we return and we remain in a bear market. Either way, I do expect to test this resistance trend line. It's just going to be a matter of whether we get the bullish breakout or we get the bearish confirmation that we're continuing this downtrend and we're going much lower. So the price action is going to be king, and I'm going to continue to tell you on the Stocks Channel Discord intraday updates of exactly where I think we're going in this market. This is definitely a very volatile and tricky market, and if this market is not doing well for your portfolio, consider just throwing in the towel and come back when the volatility is gone. There's nothing wrong with admitting that you're not great at trading volatility, and it's not worth losing your health or your sleep over a volatile market. Just be patient and let the price action confirm whether or not we're resuming into a downtrend or going back into a bull trend. That's the safest way to play this market. However, if you're a risky trader that likes this volatility, this is the scenario you want to be watching for. And if you time it just right and you're watching the price action, there is a lot of money that can be made in patterns like these. All right, so I really hope that educational portion of the video really helps you better understand exactly what's going on during this tech correction, because if you understand what I'm explaining with this ABC correction, it will help you better understand the price action and why the market is moving the way that it is. So let's go ahead and analyze the price action and the trend with today on the triple Qs, and we did see the price action going down 1.64% today. We're well below all of the moving averages, and we're still in a very strong bear trend because all of these moving averages are negative sloping and they're crossing over to the bear side. Each and every day that we go lower, the bearish momentum in the trend picks up, and it makes it less and less likely that we're going back into a bull trend. That's why it's so very important to watch this resistance trend line, and we need to see the price action break above that level before we get bullish on this market. So we're going to remain bearish because the price action and the trend are telling us that this market is a bear market. I want you to watch the support levels below at 302, 300, and then down here at 297. If we break below 297, I want you to watch these other Fibonacci levels at 289 and 280. Remember, it is possible we go down to 280, but it is still likely that we'll retest this resistance trend line before we start heading back down towards these levels. So right now, 297 should be the strongest support level that I want you to pay attention to. And if we do break below 297, look for much lower prices. Resistance is going to be above at 308 and our resistance trend line right around 313. If for some reason we do break the resistance trend line tomorrow, that would be a bullish indication. And if we break above 313, we're looking to head back to 319. I don't want you focusing on 319 just yet. because we're still in a bearish trend and it's unlikely we're going back to that level until we break out of resistance. On the S&P 500 SPY ETF, we went down 1.24% and we did break down below that gap support at 377. So we can now go ahead and delete this gap because it's closed, and that is a good sign in the long term because with that gap being closed, it does mean that we could start heading higher without that weakness of that gap below. Typically speaking, on daily charts, gaps get filled in ETFs like SPY. It's also worth noting, with that being said, that we do have a gap down here at 358. So if we do continue to head back into this bear trend and we remain in a bear market, those are the gaps that we want to pay attention to because we could start trending down towards those levels. Just like I said with the triple Qs, you want to watch these resistance levels and these resistance trend lines for possible breakouts, which will tell us that we're going back into a bull market. But right now we see bearish trending across the board and bearish price action closes below the 50 EMA. So that's not the time to be getting too bullish, and this is the time to be defensive and be looking for bearish trades. We're looking for oversold bounces and we're looking for shorting the market off of resistance levels as long as we're in a bear market. So resistance is going to be just above at 377 since we did close below that level. The 50 EMA is now at 380, and then we do have our previous support level, which is now resistance at 381. Those are the immediate levels of resistance above that we need to watch. But don't forget, it is still possible we bounce up to 384 or retest our resistance trend line at 387. Support levels below are going to be at 374 and then down here around 370 where we did find a bottom around January 29th. Don't forget, we're trading above our trend line, so if we do continue to head lower, we could find support around the trend lines around 365, and then of course we're looking at a gap close at 358 if we close below those levels. So yes, we are in a bear market in the short term. Whatever happens in the long term is to be determined, and we need to let the price action tell us when these corrections are over. So don't be getting too bullish just yet, and if you're trading, make sure you're getting out at resistance levels because those are the levels you're looking to take profits in case we continue to head lower. On the Dow Jones ETF, we went down 1.09% and we closed just above support at the 50 EMA, which is around 309. If we break down below 309, we're looking at another support level much lower around $300. Resistance levels are now going to be above at this 313 level, the 20 simple moving average at 314, and above there we do have resistance at 316. So as you can tell, the Dow is still looking the strongest because we're still holding up above the 50 EMA on the price action, and we still have a positive sloping 20 simple moving average. However, if this stock market correction becomes a broad stock market correction, expect to see selling across the board, and no sector is going to be safe in a broad stock market correction. So right now the Dow is still looking healthy above the 50 EMA, but if we do break down below that 309 level, it's going to be looking a lot more bearish. On the Arkk ETF, we came down and closed the gap at 117, and we did find support at that level. If we do close below support at 117, there is a support trend line, which is down around $110, which we can still find support at. As you can tell with the Arkk ETF, it's essentially in free fall, and it's selling off with a falling knife pattern. So you don't want to get too bullish until we get confirmation breakouts of this trend. So watch the Arkk resistance levels above at 124, the resistance trend line at 129, and if we break out of there, we're looking for resistance around 135. On the VIX, which is our fear indicator, we went up over 7% and we're back to trading above our resistance levels. We can see the VIX is still forming a lower high for the time being, but it is in a very bullish pattern and it does look like the VIX could easily continue to go higher. So in a market where we continue to see a correction in selling, I do expect to see the VIX to get back into the 30s, and that's when we could really see the selling picking up momentum, and we could see -2 and 3% days very easily. Don't forget that volatility works both ways, and it's just as likely we see the market go up 2 to 3% on a good day. If the VIX is elevated, we're going to see wild swings in either direction. So whether you're bearish or bullish, you need to watch the VIX closely and get ready for wild swings in either direction. On the US dollar, we did see a spike today and we broke out above our resistance level at 91. It looks like the dollar is going back into a bull market, and we did take out the previous daily higher high, which is right around 91.50. The next resistance level we need to watch on the dollar is going to be at 91.79. If the dollar continues to show strength, that could continue to put pressure on the stock market and we could continue to see more selling. On gold, we're very close to our support level down here at 1686, and gold is getting very oversold. It could be a good quick trade to buy gold off the support level and look for the price target above at 1761. On silver, we're also looking like we're testing support right around $25, and if the support level does hold, we're looking for a retest of the 50 EMA, which is right around 2638. On Bitcoin, we're monitoring this possible ABC correction and resumption of the bull market, but we're still failing to hold above the price target of 49,700, which is trying to form daily higher highs on the market. We still see Bitcoin looking bullish, but the price action is still below a positive sloping 20 EMA. So in order for Bitcoin to really get moving, we want to see a break back above 50,000 and a continuation of the trend to go back up towards 55,000. If Bitcoin starts breaking down from here, look for a retest of the 50 EMA and the support level, which is now around $43,000. On Amazon, we continue to see weakness, and we did go down about 0.91% today. It looks like we did find support around $29.50, and there is one more support level below there around $29.05. Don't forget the saying, buy low, sell high. The lower these stocks go, the more attractive they're eventually going to look, and eventually people will step in and start buying these stocks. So watch these support levels for potential buyers to step in, and don't forget that you're accumulating good blue chip companies at lower prices. So if you're a long-term investor, this is the time you want to start adding to your long-term positions, and you want to try to buy these stocks at these lower support levels. Look for resistance above around 30.33 and 30.90. On Tesla stock, we went down 4.86%, and we're back to retesting our support level around 618. Remember, if Tesla closes below 618, we're looking for the next support level to be somewhere around 558. Tesla is definitely in a bear market, so be defensive, and if you're buying the stock, make sure you're in it for the long term. There's nothing on this chart that screams short-term trade until we find a bottom and start bouncing. Watch resistance above, which is going to be around 695, and the 50 EMA, which is now at 734. On Apple, we went down 1.58%, and it looks like we're well on our way to finishing the last leg lower on Apple. Remember, I said this last night, that Apple is likely going to continue to drag the tech sector lower. So as Apple finishes out this last wave, it's likely going to coincide with the bottom of the tech correction, which should finish out wave C. So this really isn't that surprising to see the weakness in Apple going hand in hand with the weakness in the triple Qs. So look for Apple to possibly come as low as 114 because we did close below support at 120. So there's still downside that I want you to be careful of in this market, but if Apple does get down to 114, it could finish out this 5-wave structure to the downside, and it could be a screaming buy, and we could see buyers stepping in and start driving the market back higher for the tech sector. So I know this is a painful market and this volatility is really causing a lot of grief for some of you, but the good news is that the bottom is likely coming in the near future, and we're at least due for a relief rally. Whether we go back into a bull market or return to a bear market, either way, we're due for a rally off of these support levels in the very near future. On the financial sector, we finally saw some weakness today, going down 1.14%. We closed just below the 5 EMA, but we still have a very strong bull trend. On the industrials, we also saw weakness today, going down 1.60%, closing below the 5 EMA and the 13 EMA, but still holding up above a positive sloping 20 simple moving average with a bullish trend. On the energy sector, we continue to see nothing but bulls, and we went up 2.39%. We're still closing over the 5 EMA with a very strong bull trend, and at this point it seems like nothing can take down the energy sector as it just continues to defy gravity and goes higher each and every day. On healthcare, we continue to see weakness, going down 1.34%, and remember that healthcare and the tech sector were the two sectors that started these corrections. We're likely not going to see the bottom of this correction until we see strength return to the tech sector and return to the healthcare sector. We're in a bearish trend with bearish price action on healthcare, and it looks like there's no end in sight until we finally find a support level to bounce off of. So going back to the S&P 500, I want to remind you to remain disciplined and remain patient. The S&P 500 is not going higher while the tech sector is in free fall. Remember that the SPY ETF is over 30% tech, so while tech is going lower, expect to see the S&P 500 going lower with it. So watch these very critical support levels and watch my analysis on the tech sector for a possible bottom of the correction, and we should be due for a relief rally in the very near future. On that bounce, we're going to ultimately see the price action test resistance, and we're going to either get confirmation of a continuation of the bear trend, or we're going to get a confirmation of a break of the bear trend as we start the very early stages of a new bull trend. So be patient and let the price action dictate what this market's going to do. Remember, on the Stocks Channel Discord, I'm giving intraday updates, and I'm updating you live with my analysis on exactly what I see going on in the market. A lot of you have been giving me very positive feedback and saying this has been a huge help, and some of you are actually even using the information to make profits in this volatile time. So if you're interested in the Stocks Channel Discord, you can find out how to join by clicking on the link in the description of this video. So next up, let's jump over to our hot stock, which is Lockheed Martin, and we did see a very volatile day with Lockheed today. We went down 0.78%, but intraday we did hit that price target yet again at 344. We're still finding support around the 20 simple moving average around 338, and we did come very close to our other support level before bouncing, which is right around 333. Remember that this market is very volatile, but Lockheed Martin has been very robust during this time, and on some days we saw selling, we even see Lockheed Martin going up. So remember to add stocks like Lockheed to your portfolio and to your trading because they can really help offset if you're very tech heavy. Remember to diversify and look for hot stocks like this that are still doing well. So look for possible resistance levels above now at 339 and 344. If we break over 344, we're likely going to retest our third price target at 348. So remember to stay disciplined in this market, and if you need help, come check out the Stocks Channel Discord. Thanks for watching, everybody. I hope you're doing well in this market, and as always, I will see you in the next episode.